Welcome to TradeTheMBI.com. This is John. This report is for the 6th of June. Well, you're going to have some kind of pause, but we've had this accelerated move of the MBI readings as well as cyan dipping under DOC red, which is always a buy in that rise of the shakeout. Yesterday I was talking about this line here. I called it white, but it is actually azure, so it's kind of a bluish color. It just depends on your screen and how it shows up. But in our indicator setups from an input standpoint, it would be the Azure line. And of course, positive extreme. So we know it's going to have to get filled back at some point, and it's just a question of as this MBI white rises and you get that crossover, you're going to have the configuration. But of course, you'll need to see this constriction of the midterm buyers in green DOC and cyan moving back above red. Otherwise, it's just going to be light refill. And actually, the most effective move to go higher would be a fill back in of that space. But we've already talked about how, from a daily standpoint, once this rise starts to soften out, is when you begin to get these kinds of retraces. Now, of course, this has all been because of the Nasdaq, and the Nasdaq has been the leader in through all of this, and you can still see not a whole lot of strength in the short activity and a huge disparity between DOC cyan and red, which is reflecting of why we've seen the market do this. Now, short-term buyers from a Nasdaq standpoint have been fading, which is why your ranges have been smaller, because as you run out of shorts to squeeze, you're left with a very simple situation. No new buyers to in the form of short covers to kind of really accelerate things. From a treasury standpoint, they expected return coming down. None of this is a surprise. And the euro still staying flat, and none of this is going to change in the near term. This is a lot of the realization that the Fed really dominates the situation and has complete control over what is taking place as far as where things move, and they're not budging on the rate situation. So the market is really coming to that reality. Oil dipping back down just to that 70 handle, and that again, these are all things that we've been talking about that's going to be effective in just maintaining a modest level of growth that has a lot of uncertainty built into it. And that poses problems for things like gold in this case, where it's already refilled based on the spike of the weight back to the 0%. But what we're going to look for will be, any signs that inflation creeps back up. I think that as long as oil is maintained, you're not going to have that dramatic pressure. Bitcoin fulfilling its move to the 0% off the MBI white spike, and I don't have any issues with that. I mean, we talked about this with the positive extremes. Uh, Going back to the 24.6 range, so potentially has still a little bit further to go. ETH, likewise, that breakout move had already been filled in this particular case, and the original breakout wasn't quite as dramatic. So, probably going to do, like I said, just trade across for a while until there's some kind of impetus. And of course, my 50K chart still causing me problems, as well as the 5K. So that's the long and the short of it for now. But things are pretty flat at this particular stage, so no real major drama at this step. As always, though, I'll continue to update you, and when I get those charts up, I'll definitely put an image of them on our Skype chat. Trade well.